A bank CEO wired $47 million of his customers' money to strangers he met on WhatsApp, and he did it willingly, convinced he was a genius investor. By the time anyone figured out what had happened, the bank was gone, the money was gone, and Shan Hanes was looking at 24 years in federal prison. This is the story of pig butchering, one of the most psychologically sophisticated financial scams ever devised. And the most unsettling part? The victim wasn't some lonely retiree who didn't know better. He was the CEO of a federally regulated bank. Let's go back to the beginning, because understanding how this started is the only way to understand how it got so catastrophic. Shan Hanes was the chief executive of Heartland Tri-State Bank, a small community bank in Elkhart, Kansas, population just under 2,000 people. This was the kind of bank where everyone knew everyone. Farmers deposited harvest money there, families kept their life savings there. It had been a pillar of that community for decades. Hanes was a respected figure, a local leader, a trusted face. Sometime in 2022, Hanes was contacted by a stranger. The exact origin of first contact has not been fully established in public record, but what is known is this: a person reached out to him through a messaging platform, built a friendly rapport over time, and eventually introduced him to what appeared to be a remarkable cryptocurrency investment opportunity. This is the textbook opening move of pig butchering. Now, if you haven't heard that term before, here's what it means, and it's deliberately disturbing. Pig butchering is a scam where fraudsters fatten up their victims emotionally before slaughtering them financially. They're patient. They spend weeks, sometimes months, building genuine feeling relationships. They send good morning messages. They share personal stories. They create trust. Then, once that trust is solid, they introduce the investment. The platforms they use look real. The returns look real. You can log in and watch your balance grow. You can even make small withdrawals at first, just to prove it works. But it's all fake. Every number on that screen is fabricated. And the moment you try to pull out serious money, suddenly there are fees, taxes, technical issues. The scammers keep asking for more deposits to unlock your funds. The exits are designed to be invisible. Here's the question that was probably forming in your mind. How does a bank CEO, someone who deals in finance professionally, fall for this? Hold on to that question. The answer is more uncomfortable than you'd expect. What investigators and fraud researchers have documented about pig butchering is that it targets something deeper than financial knowledge. It targets emotional need, loneliness, the thrill of exclusivity, the ego of feeling like you found something other people don't know about. These scam operations, many of which are run out of Southeast Asia using trafficked workers, employ trained psychological playbooks. They know how to identify what a person wants: validation, connection, status, and they provide exactly that before any money is ever mentioned. Hanes, according to court documents, became convinced he had found a legitimate and highly lucrative investment. But here's where this story diverges from the typical victim story, and this is where it becomes something darker. Hanes didn't just invest his own money. He ran out of personal funds, so he started taking money that wasn't his. Court records show that between May and July of 2023, Hanes conducted 11 separate wire transfers, totaling $47 million, out of Heartland Tri-State Bank and into cryptocurrency wallets controlled by the scammers. He transferred money from customer accounts. He transferred from investment funds held at the bank. He even moved money from a local church's account and a farm cooperative's funds. People who had no idea anything was happening. Let that number settle for a moment. $47 million from a community bank in a town of 2,000 people. By July 2023, federal regulators discovered what had happened during a routine examination. The Kansas Office of the State Bank Commissioner and the FDIC moved quickly. Heartland Tri-State Bank was seized and closed on July 28, 2023, one of the few bank failures that year, and arguably the most unusual in American banking history. The FDIC arranged for Dream First Bank to assume the deposits, which meant customers didn't lose their savings outright. But the institution, the community anchor, was gone. Shan Hanes was arrested. He pleaded guilty to one count of embezzlement by a bank officer. In June 2024, he was sentenced to 24 years in federal prison. He was 60 years old. Now, back to that question. How does someone this smart fall this hard? Former FBI agent and fraud expert guidance published in multiple investigative reports points to something called investment trance, a state where the emotional investment in believing something is real overrides analytical thinking. The more money Hanes put in, the more psychologically committed he became. Admitting the scam was real meant admitting he had already lost everything. So instead, he kept going. He escalated. He crossed lines that should have been uncrossable. And at each step, the scammers were right there, reassuring him, explaining the delay, promising the payout was just one more transfer away. This is the cruelest mechanics of the scam. The victim becomes their own worst enemy. The trap doesn't need walls because the victim builds them from the inside. The people who suffered most weren't Hanes. It was the congregation that trusted the bank with their church funds, the farmers who had their harvest deposits there.
The families in Elkhart who didn't choose any of this and had no way to see it coming. Pig butchering scams, according to the FBI's Internet Crime Complaint Center, generated over $3.5 billion in reported losses in the United States in 2023 alone. That figure is almost certainly an undercount. Many victims never report out of shame. The operations behind these scams are sophisticated transnational criminal enterprises, many based in Myanmar, Cambodia, and Laos, operating out of fortified compounds, using workers who were themselves trafficked and forced to run the fraud under threat of violence. This isn't a story about a gullible person. It's a story about a weapons-grade psychological operation meeting a moment of human vulnerability, and the catastrophic consequences that followed when the person targeted had access to other people's money. Shan Hanes will likely spend the rest of his functional life in prison. The bank is gone. And the scammers? In almost every pig butchering case, the money is moved through cryptocurrency mixers and offshore accounts so quickly that recovery is nearly impossible. The $47 million from Elkhart, Kansas is almost certainly gone forever. The lesson here isn't simply don't talk to strangers online. It's that our psychological defenses, the ones that protect us from manipulation, can be systematically dismantled by people who have studied exactly how to do it. No credential, no title, no professional experience makes you immune. What makes you less vulnerable is knowing the playbook. Unsolicited contact, rapid emotional bonding, exclusive investment opportunity, early small withdrawals to build trust, then escalating requests for more. That is the pattern, every single time. If something you found through a personal connection, not a licensed broker, not a regulated platform, is promising returns that sound too good to be true, stop. Verify independently. Tell someone you trust. The sophistication of the scam is designed specifically to make you feel like those steps are unnecessary. If this story unsettled you, good. This discomfort is protective. Subscribe for a new financial crime story every week. And if you want to go deeper on cryptocurrency fraud, the next video on this channel covers the collapse of FTX and how Sam Bankman-Fried convinced the world he was a visionary while billions disappeared. Drop a comment below with this. Do you think the bank customers who lost access to their accounts should have been made whole beyond FDIC coverage? I want to know where you stand.